Hi, it's David from Freedom Founders. Astute investors are always trying to figure out what is going on in the market, what's going on in the economy, geopolitically, data points, so much confusion, so much information. It is hard to pinpoint and make decisions with all the noise out there. I am specifically not a data analysis. I don't look at graphs and things. I have other people curate that for me, and I read what their analysis is, but I don't do that that deep digging in that arena. I'm more of a macro person. I've looked at the big picture. I've done that all my adult life. Well, when I first started investing 4+ decades ago in real estate, I really had no idea what was going on in the economy anyway back then. I was buying my first houses with interest rates above 10%, and then many of them in the 8.5, 9, 10% range. I didn't know the difference, and that was part of the economy back then. Didn't matter. We had huge inflation back in the late 60s and 70s, and then we've gone into a 40-year downturn in interest rates since 1980, 81. Now we're at historic lows that we haven't seen in 720 years. So what do we make about all of this? Again, I look at the macro. And when I look at the macro, I see a lot of things that are still variables in the economy. Certainly this last year with COVID was a black swan. No one could have predicted it. And the resultant accommodations to prevent widespread economic malaise have been unprecedented. I'm not judging it per se. I'm just saying it is what it is, and we have to look at that. The federal deficits, the spending, that both sides of the aisle. This is a bipartisan thing. It's not one or the other. Trump was doing it before he left office. Biden is doing the same thing, and nobody on either side is pushing back. Why? Politically, politicians want to remain in power. There's very, very few. I mean, just a handful that actually, I think, speak about what's right for the country, and they're not strong enough. They don't have enough of an advocacy to make a change. We have this railroaded momentum now towards massive spending, and the politicians think they can get away with it, or at least they think they can get away with it until they're out of office. And then it's someone else's problem, like the taxpayers, like us, like our kids and grandkids. I know I'm getting a little bit on a rant here, but this is the situation. We can only control what we control in our lives. We can't control these outside forces. We can get mad about them, angry, frustrated. Yes, we can vote. We can even get involved in politics if we want to. I'm not telling you what to do or not to do, but I think first and foremost, and it's really about why I wrote the book. Started writing the book last year with Dan Kennedy, Own Your Freedom. You've got to start with you first. Put your oxygen mask on first. Then you can help the other people you want to help. Your family, your kids, grandkids, whoever it is you want to help, charities, missions you want to do. But if you don't protect and save yourself first, then you're going to be in trouble. So again, back to the economy. We have this massive deficit spending that we see no tailing that back at all. The Federal Reserve says they're going to start tapering back quantitative easing. We'll see what happens, because when the economy starts to go south a little bit and the masses get upset because they're not getting the unemployment stimulus anymore, and they have to go back to work, or they can't find the jobs they want, or businesses are shutting down. I promise you that we don't have the political will to go through the hard times anymore. And again, I don't wish hard times on anybody, but we have to sometimes go through tough times to get to the other side. This country doesn't have the willpower to do it anymore, and that's a bad thing, because unless we go through the tough times, where these business market cycles are supposed to address largesse in both the government and the private sector, speculation, too much capital moving too fast, too much growth and expansion. We're not having that right now. The printing presses are on full speed and don't show signs of stopping. Now, we also have the issue of the COVID variant, Delta, Lambda, Mu. We don't know where this is going. We thought we were coming out of this earlier in the spring. We thought the vaccination and herd immunity across the board was starting to open things back up again. Bam, the Delta variant hits, and we're back cycling back. Not going to blame vaccinated, unvaccinated. I'm not going there at all. It is what it is. And once again, I think a third topic is, again, a little bit political, but the ramifications of our withdrawal from Afghanistan, I think, overall, has put a damper on the sentiments of our country. Not everybody, but I think the majority don't feel really good about what's happened there. I'm not being political and saying we should be there, shouldn't be there. I think we should also have been withdrawing. But again, the way it was done, I think a lot of people feel that now we have a country that at least we had control over, or control over the terrorists, and now they run the roost, and they've got billions of dollars, and they've got billions of dollars of military high-grade equipment. Not a good thing. So that, I think, is going to put that, plus the variant, is going to put a damper on consumer spending. Consumer spending is what drives 2/3 of our economy, the GDP. And if people aren't spending, if they aren't getting that stimulus money anymore, the loans have run their course or have to be paid back, small businesses, all this extra money that's been out there this last year when people couldn't go anywhere and spend it, is now being tapered off. Where's that going to leave us? We have to watch and see. So we've got to be careful about these things. The exuberance in the economy, in the asset markets, stock market, Wall Street, real estate, businesses in general, the low cost, or what I call the cheap or hot money that is out there circulating and is everywhere, is pushed valuations up tremendously. My friend Alistair McDonald said on a call I had with him the other day that, and he looks at data, so he digs down into data, and he said, as a reference point, if you had a dental practice, a business that had a gross revenue annual run rate of $1 million, gross revenues, $1 million, not EBITDA, not profit, just gross top line revenue of $1 million, that practice, based on what the stock market valuations are today, would be selling for over $3 million, like $3.1 million. That's the difference. For those of you who understand business or the dental business, would you pay 3 times the gross revenue for a business? Of course you wouldn't. There's something wrong here. It's hot money. We've got to realize what's going on there. Now, the reason I like real estate is because I understand it. I can look at a property, a single family property, or I can look at someone who's setting up a syndication, look at their numbers, and I can say, does this property, does it cash flow based on the valuation? I've got some reference points there. Stock market, it's just crazy off the charts. I don't know how people can live there right now because the asymmetric risk of the market taking a drop, a dive, a correction of some kind is statistically, it's there. Now, that may not happen for 6 more months, 12 more months. I don't want to play ball there. I want to put my capital in investments that provide me sustainable, predictable cash flow based on the 40 years I've been involved in alternatives. That's where my safety net is. Whether I'm investing in debt as an asset, very, very safe on the capital stack, or the right kind of equities, which can hedge me against inflation, and I can use the low interest rates today, either myself or I can have a syndicator do that. That's what I'm looking at in the marketplace. So again, we have to be as rational as we can and not feel like the exuberance of the market means we're going to miss out. FOMO, it runs deeply in these markets. Everybody that's out there today is looking for yield, don't want to miss out on the latest deal, whether it's cryptocurrency or Wall Street, Reddit, GameStop, or real estate. It happens just the same in real estate. People get out there and they think that just because they've made money in the last 2, 3, 4, 5 years, that they've got a Midas touch. No, it has nothing to do with them in particular. It's the timing of the market. Have they been through a downturn? Have they been through a market correction? What did they learn? If they haven't been through one, I would stay far, far away. And there's way too much in the way of hot money chasing these real estate deals, the syndications, a lot of funds out there today, and the crowdfunding, Fundrise, and some of those. It is the wild, wild west. And syndicators and fund managers, because of their securities offerings, they really got no liability. I mean, they can't commit fraud, but they can give you projections and target returns. And if they don't get those returns, as long as they don't commit fraud, they have no liability. They all make money on the front end, and then there's nothing wrong with that. But you just got to realize that if you're putting money with somebody you don't know who they are, you don't understand the dynamics of the syndication or the fund, what that means, you're gambling. You're gambling, and this is not a time to gamble. So if you're not plugged in, if you don't have a network, a board of advisors, some guidance, or if you don't have experience in the markets, it's time to be very, very, very careful right now. I'll leave it there. I'll have more to say later, but I just want you to remember that you've got to be your advocate to protect your wealth, your freedom, your autonomy. It is up to you. No one else is going to do it for you.